Hi guys, it's Jordan from Mountway here, and today we're going to be talking about the differences to using a broker versus going direct to the bank when obtaining finance. We'll call this a DIY approach, and I want to start with a little story, a little DIY story that I'm not totally proud of, but it's a great example of how you can just get around all the trouble if you go and find the right people first time. So I'm at home, I'm doing a little bit of maintenance, and I see this light fitting that was flickering. It wasn't a light bulb, we'd already tried that, and I figured the light fitting needs to be changed. I watched a YouTube video, I have half a brain, I decided to turn the power off. I went and got a light fitting from the hardware store, and I unscrewed it from the roof and looked at it. 3 wires to change, simple, right? There was just turning of a couple of screws. So that's what I did. Reinstalled the light fitting, in it went, turned on, beautiful, job done. However, the light wouldn't turn off. And this is probably a very funny story for all the electricians out there. I had connected the earth wire to the wrong part of the light. And as it turned out, this was actually a very dangerous situation. So luckily I was able to call my friend who was an electrician, and he very quickly said, that's your problem. Now, the illustration that I'm drawing here is that you can attempt the DIY process, often get something done, but a professional will get it done the right way the first time and save you a whole bunch of headaches. It's a bit like that with loans. There are ways to go direct. Usually you're going direct to a bank. There are ways to do a little bit of research, but what you'll find is that there are complexities in the world of finance, and there are more than just simply obtaining an approval or finding the rate. Much more is involved in the role of a broker. This concept of finding the right person to do things is not uncommon. If we want our tax done, we go to an accountant. If we want our car fixed, we will usually go to a mechanic, or we'll do a bad job and take it to a mechanic. And my favorite is haircuts. We think we can cut our own hair, and we realize it's absolutely awful, and we go to a hairdresser to go and fix it up, right? So this is pretty common. The theme of today is, why would you do the DIY process, or what are the benefits to doing the DIY process versus the benefits of using a broker? Now, firstly, I'm going to point out the obvious elephant in the room. I'm a finance broker. So naturally, I'm inclined to recommend that there are greater benefits to using a broker versus the DIY process. The introduction story is just an illustration of that. Why am I a finance broker? Why did I choose this career path? Because when I was a banker, it was quite clear to me that I was only ever able to apply one solution for my customers, and that was the bank solution. And unfortunately, sometimes that solution was no. Sorry, we can't help you. And that was quite soul destroying. I wanted to help people. I love helping people. I stepped into broking because I was able to then open up my book of possibilities to the clients by giving them the solution that was possible with numerous banks. While this is called the DIY versus broker video, it's really about bank versus broker, because when you do the DIY approach, you kind of need to choose your bank and go with them. It's kind of physically very difficult as a person, with a job and kids and family and who knows what else going on, to actually engage with multiple banks at one time. And furthermore, you'll find that you can only actually have one application going at a time. Banks get very unhappy when you have 2 applications on the hop at one time. What does a mortgage broker do, or a finance broker, if you're looking at business finance? Well, think of this, the Jumanji jungle. This jungle is full of pitfalls, right? You got, like massive beasts that are gonna eat you. You've got insects the size of, your head. You've got a guy with a gun hunting people, any number of stuff. All they gotta try and do is get from where they started through to the top of the hill. I can't exactly remember the story, but the idea is it's an absolute jungle, no pun intended. So what would be great if you're in that situation, hypothetically, is to have a guide. a guide, somebody who knows that jungle. Don't walk there. There's a big boggy marsh there and you're going to fall in and you won't be able to get out. That way might look like the fastest way, but there's a great big ravine and you won't be able to get past it. You know, these are the kinds of things. So your broker is your guide through that jungle. Your goal is the top of the hill. When people look at the DIY approach, they probably consider that brokers do price checking, and they do. Perhaps there's a perception that they do just like an order checking, you know, like, hi there, Mr. Broker, I would like to buy a house. I have this much deposit, I need a loan for the rest. We can do that as well. But one of the benefits to using a broker is everything that's not spoken. When we sort of go, okay, well, let's look at what you've got going on and why are you trying to buy this house? And are your other things optimized? Because I'm going to have to look at that through the process anyway. And more importantly, if this purchase of yours is super, super important, why don't we make sure we slam dunk that first time so that you don't have to wear the stress of the process, you don't have problems with whether or not you're actually going to get approval. We get the right policy fit in the first place so that you can navigate that jungle effectively. Okay, so let's go through the advantages of using a mortgage broker. Okay, first and foremost, we give a damn. Okay, so most mortgage brokers, there's actually, you know, quite a few mortgage brokers operating in Australia. Most of them are single person operations, and some are only sort of 2 or 3. Only a very small subset of the overall broker population are big businesses. So we're talking small business owners. This is their livelihood. This is their personal brand. They come to you, they want to get to know you, they want to understand you, and they want you to trust them because that's how they make a trust. Okay, so it's very personal. They give a damn about your result because it is fundamentally wrapped up in their result. So, you know, whilst an employee of a bank, you know, you might sort of do your research, go direct and find that bank, you'll inevitably become into an employee. Now, I'm not saying people don't care, but they're in that job and it's a job. So, you know, they've got internal company pressures and they've got things like, do I like this job and is it a good fit for me? And all of these things mean that they are maybe not as invested in what you've got going on as a mortgage broker is. Personally, I have done this, right? And we're talking, so not just when it comes to, I want to get to know you and I want to get the right outcome, but when it gets high stakes. Frequently, it comes down to, I want to buy this property. I must, this is part of our plan. I absolutely would die if we couldn't get it. Sometimes it's a bit more serious, like a refinance must happen because we are in a state of dispute with this existing bank. Those settlements, that transition from one bank to another, or that purchase actually being approved and ultimately settled, can be high stakes. Sometimes there's big money involved if you're talking penalties for late settlement. And personally, I've done this. I've worked weekends and late nights at a time. I don't like to do it all the time, but to get that right result, because that matters to me. I'm dealing with that person and their outcome is something that I'm wearing as well. And it's a bit more difficult to get that kind of commitment from an employee in a bank who simply clocks off and, you know, is encouraged, look, you know, once the clock off time comes, you know, you go home. Not only are we looking to get more from the relationship, we are also more invested in getting the outcome that you want. We're talking another benefit here, research, experience, the right path, first time, get it right. Many of you maybe believe lending is simple, and it kind of is, I guess. I mean, what we're looking at is, do you have enough income to pay that loan? Do you have enough security to sit against that loan, which generally comes down to, you know, how big is your deposit or how much equity do you have in your portfolio? But in the last 20 years, there's been a massive increase in the regulation around financial services, particularly home lending, right? And a lot of this is really, really positive. You know, consumers are better protected than ever before from rogue actors, both bankers and brokers, who, you know, at one stage were, you know, getting people into debt that they couldn't sustain. Those situations are really horrible, and the regulation has helped to clamp down on that kind of activity. But as a result, the policy books that sit behind every bank are more and more detailed and trickier to navigate than ever. And what we're talking about is you think you have the equity and the income, but the bank has a book of policies that decides how they're going to buffer and vary the actual situation to build in the risk margins that they're talking about so that they can say we are lending responsibly. A great example is rental income. By and large, most banks will cap that at 80% of the actual figure. So you think you're earning, X amount of rent. You're actually, in the bank's eyes, earning 80% of that. And then there's a bunch of variations around that because you might be working with a more conservative bank who are using 75% rental, or you might be looking at, some banks have a cap on how much rental you can get before they don't count any more income at all, right? So if you're a professional property investor, these things matter. And the more detailed these policies get, the more you need an expert to navigate through them, because you can get ticked off on 9 out of 10 items. And if one policy item falls, you don't get the approval, no matter how strong it is. Or, you risk having to go through an additional process for an exception approval. It's stressful. Brokers help navigate that from the outset. What we do is a great deal of work into researching the policy fit first and foremost, right? So that's about making sure we have the loans and the banks which are the most likely to get you approved. And then we start looking at, are there products, the type of products that you need? And which one is the cheapest and which one is likely to get the approval done in a reasonable time frame. All of those considerations come into play. Now, these aren't things that you can necessarily go out and find doing the DIY approach. It's much more difficult to understand those things at the outset. That's a pretty good sort of comparison to some of these DIY stories where, you could probably YouTube most of what you need to do to do sort of jobs around the house and to fix your car and cut hair. But there's nuance in getting it done really, really well. Nuance, experience, that kind of thing. What brokers do is work in this industry day in, day out for years. They know those nuances, they know how to get it right, they know how to do it well, rather than just perhaps stumbling through and sometimes getting lucky, sometimes not. I would like to provide an example of this. Many of our clients in Mountway are self-employed, and there are numerous special and sometimes tricky policies which banks apply to self-employed people. And particularly when you're dealing in a regional setting, as we are. There's another layer of policies that apply simply to regional locations. And so you need to navigate through this. You need to be a little bit more creative at times, look at different solutions. The brokers have that view of the entire market, and they're able to do that rather than saying, sorry, we've looked at what we can do and we can't get there. All right, let's look at something else. Access to multiple service providers. Now, I've talked about this, I've alluded to it already. We're connected. We're not just with several banks. And just so you know, the process to being a broker is you do your education and you get yourself registered and you pass all the checks and things. And then you need to go and engage every single bank that you want to be able to recommend to your clients. And some of them put you through a test and a product knowledge, a training. So you need to be pretty clued in to what's going on. And so when a broker says I can lend to 40, 50, 60 different lenders, they have gone through and become accredited with every single one of those lenders. And so they know, they understand what they can and can't do, what those lenders, who they're targeting, who they're best suited for. And that's why when it comes to looking at your special circumstances, if there's anything that kind of tips you out of that sort of normal bucket, that's where they can go, I have a wide range of banks at my fingertips, and this is the one that particularly suits your circumstances. The other one is that they have generally got this sort of like team of industry experts around them, people they deal with, colleagues, referrers, that kind of thing. We're talking accountants, lawyers, financial planners, insurers, Brokers are connected to these people for good reason, because their set of skills allow them to see risks and blind spots that you may not be aware of as they are moving through all of your financial information. They need to see that information anyway, so being able to spot those things and throw in value-adding ideas that you're not aware of is really important. And that can mean getting you in touch with other experts that can add even more value to what you're doing. So another benefit of going through brokers is the wraparound service. It's somewhat related to the prior one, but this is about how we can help you strategize to get what you want. And so I mentioned sort of this order taking service being like kind of the basic and probably misunderstood aspect of what brokers do. It's not simply an order taking service. Many times people say, we want this, but we don't know how to get it. And that's music to my ears particularly, because what we can do in those situations is put together a plan for how you can get there. Now, one of the very, very common ones that we see that we've done numerous times here at Mountway is helping people devise a budget to save for a deposit, particularly first home buyers. You know, they're pretty new to the world of finance and even just managing money, and they find that hugely valuable. But in that same conversation, we're often looking at some of the government programs that they can get onto that help them either get into housing with a smaller budget or save money or be granted some money. And we talk them through that process to help them put together their strategy for getting into housing sooner. And that's really important, because if we were just simply an order taking service, we'd be turning those people away and saying, come back to me when you have what you need to be loan ready. It's quite important that the additional wraparound service of helping you actually get to that point of being able to borrow money is recognised, and it's something you get from brokers and unfortunately not from banks necessarily. I've also done here at Mountway, we have done retirement plans for people which help them ensure that any residual debt in retirement is manageable. So we're looking at other income sources to make sure that they can wind down their work and still have their investments in place and not have to worry, sleep well at night, etc. I've also helped people who are keen property investors strategize how they're going to build a portfolio that's going to deliver passive income. Again, you know, with the goal of sort of winding off in employment or going traveling or something like that. So there are quite a few different ways that we can apply this wraparound service to help people get to the goal that they want. And it doesn't simply involve, here's a way to get approval. It can sometimes be the pre-steps before that. Some other benefits to using broker: your time and convenience. Now that's pretty simple, right? You get a service provider to do the research. They will move through it quickly, more effectively, because they do it day in, day out, and they've got all that background knowledge. If I had just got my friend, the electrician, to install that light switch, that light fitting first time, I wouldn't have had to, you know, mess around with, you know, checking things and wondering why the light switch wasn't turning off and ultimately giving me a call anyway. Probably would have saved me a few hours. Another benefit to using a broker is ongoing tailored advice. So this is really, really important. And again, it goes back to brokers are mostly small business owners. We want to stay connected to you. When the deal is settled, we maintain an income source, in fact, from your loan. That's disclosed, that's known, it's called a trail income. But it's very, very important that we nurture that. We want to stay in touch, we want to hear from you, and we want to continue to help you throughout your financial journey. We're motivated, in fact, to do that. That's actually the reason why trail income was introduced. Unfortunate outcome with the way banks are structured in this day and age is that once your loan is written, you generally go into this sort of mass market pool. You probably get sort of some kind of communication every now and then, formal letters or whatnot, but it's not like you can go into a bank, find the banker that you initially worked with. They remember you and have your details ready to go and can kind of like pick up that conversation that you finish off with the settlement of your loan last time. That's a shame. But the benefit to using a broker is that you can do that. That's what the best brokers do, and that's certainly our intent here at Mountway. Now, the disadvantages of using a mortgage broker, I've got to throw a few in here, don't I? Fees. Look, not everyone charges fees. Sometimes we do. The thing about fees are, we'll disclose them up front. We have to disclose them up front. And once they're disclosed, it's your choice. there's many mortgage brokers out there. Many don't charge fees. Fees are charged because sometimes things get complex or drawn out or for whatever reason. That's a business model. Not everyone does it, and so therefore it's not necessarily a disadvantage to each and every broker. However, like I said, your choice. You can decide to pay or move on. This one is the other potential disadvantage of using a broker, potential bias. We had to put that in there because it's alleged out there that brokers are biased in one way or another. I mentioned regulation earlier. Some of the regulation that's come through in the last few years has been really, really centric for consumers and their protection, and I think they're quite good. We're under a thing called the best interest duty, including also responsible lending, and that means that we need to make sure that what we put forward is in your best interest. That doesn't mean it's the bank that we think we like to work with or the bank that we think will get paid the most from. It has to be proven, documented and reviewed often that recommendation is in your best interest. Now that can mean a combination of lowest cost, most suitable for what you want. So, for example, some people want branch access or ATM access. Some people want the shortest path to approval. We talked about policy fit being very important. These things go into the recommendation more so than ever before. And so the bias has largely been addressed by regulation. If you're an employee of a bank, are you not biased to that product? I'm sure you are. In fact, bankers are employed to simply say, this is what we have, full stop. So there's, I guess there's no bias, but they're not exactly telling you, here are the benefits and cons of using a different product. You will get that from a broker because it's part of the process. So what about banks? What are the pros and cons of going to the bank? Essentially, it's the opposite. Everything that we've just talked about. You have to use and invest your time and resources to do the research. As we mentioned, in the whole wide world of the details, the nuances and the specifics of policies and the various considerations that go into recommending the best solution for you, there's actually a lot more than sort of that basic level. Most people can sort of understand at a basic level the loan application process and how things get through. But the nuances are the ones that help you get it done well. That's where the bank, or going direct to a bank, is a bit hit and miss. That investment of your time could very well be wasted if you find yourself in one of those tricky policy niches and you don't know that you're in that niche until you engage with a bank and they say, yeah, we think you can help you, and then you get several weeks in and then they go, oops, sorry, we didn't see that one. We can't do it. And then you have to try and pick up that conversation with another bank and potentially a third bank. So that's one of the major obstacles to going direct with the bank. So let's sum this all up. What is the right choice for you, broker or bank, slash DIY? I see many situations in my line of work. I see people who are very, very dedicated to using good advice, third parties, to help them make decisions through their life, and a broker is just one of those people. And at the other side of the spectrum, I see people who are quite resistant. They want to be stoic, independent. Sometimes, I don't want to sort of categorise people here too heavily, but quite a few older people who are financially stable probably feel a bit too proud to use a broker, and they still have this concept of financial institutions being a sort of a stalwart of our society. So they're quite happy to continue to go back to a bank that they're used to seeing, used to dealing with. But the environment is changing, and very often I start to see that trust and loyalty get challenged because banks have moved to a very formalised environment. We can no longer sort of just rely on the fact that you've been a good customer for years being the basis of getting continued easy treatment. They will still put you through the same process when you go for finance. They won't allow shortcuts to be made simply because your credit history with them shows that you've always paid on time. Unfortunately, that's just the way it is. But also the way banks are structured. Most home loans are in a mass market pool. As I mentioned before, it's very unlikely that you can go to a banker and have the same chat and they'll remember you. Positions are changing on a regular basis, branches are closing down, so much more sort of engagement online and via telephone. And the reality of that in the back office is that there's teams of bankers and you just pick up whoever happens to answer the phone. Your ability to sort of be treated as a returning, valued and loyal customer is starting to get challenged in this day and age. It means that it's harder to justify going back and being a repeat customer with a bank simply on the basis that they know you, because it's not so true anymore. When it comes to whether you're looking for a broker or DIY, obviously you can weigh up all of those pros and cons. But I'll just finish off by saying that if you do go through a broker, the best brokers are looking to demonstrate value, trust and a care factor to you. And that is the key difference in my mind. I hope that's been convincing and compelling for you. Like I said, I am a broker, so I'm definitely more one-sided in my point of view, but that is a bit of a landscape of the differences between going DIY and going through a broker. Thank you.